and Chief Operating Officer Jordan Schwartz for a conversation on mobilizing finance for regional resilience.
Jordan, thank you for joining us. I know you've got a very busy agenda here this week, so we're so excited to have you with us.
Thank you so much, Andrew. It's really a pleasure to join you. I'm a little scared to hear what you're going to ask. I've been told to have my coffee early and frequently.
Okay, are you coffeeed up? Are you ready?
Yeah, I think I'm ready.
Okay, no, this will be easy and interesting as well. And what I'd love to do for starters is to make sure everyone's clear on what the Inter-American Development Bank is, what as we call it, IDB, the acronym. Founded in 1959, it is the original multilateral development bank. Regional, excuse me. And we are, you've seen over that period of time a lot of financial ructions. There's been a lot of changes in the cycle. We're in one right now. And regional MBDs can be a stabilizing force at times like that. And amidst geopolitical shifts, domestic political change. So maybe you could tell us a little bit about what, just scene setter for us, what IDB does, and give us some examples of that. And if you would, kind of along the way, share one kind of under-the-radar success story at IDB that you wish people knew more about, so that we can get a better handle on what IDB does.
Oh, very good. So just a little bit of context about the institution. Just like you said, it was founded during the Eisenhower administration and structured largely like the World Bank as a financial intermediator. And what I mean by that is we offer loans to sovereign governments. They provide a guarantee or a counter guarantee for those loans. We maintain a AAA rating because of the capital that sits at the base of the institution, which comes from the United States, Europe, Japan, and actually from those borrowing countries as well. And so we're able to pass on finance. We go to the bond markets, we can raise money at AAA rates, and we can pass on long-term financing at very affordable rates that most emerging markets can't get directly themselves. And with that, we provide technical assistance, whether it's the development of real sector investments, energy, transport, water sector utilities, or whether it's in human capital development, health education, social protection. We provide advice on macro fiscal management and on private sector development and many other areas. So that concept of intermediation that Maynard Keynes conceived of between the First and Second World War, and which was implemented with the World Bank after World War II to help for the reconstruction of Europe and Japan, and eventually to help countries coming out of colonialism to develop and be able to get access to both assistance, technical assistance, and long-term financing, was brought to regional development banks in the late 50s and early 60s, and starting with the IDB. The only difference is, or the main difference, I think, there's two things. Like, one is our board, our ownership is basically split between borrowers and non-borrowers. And the U.S. is the largest shareholder with 30% of the ownership of the institution. So the Secretary of Treasury is the governor from the United States for the institution. But 50.1% are borrowing countries, and this is what the U.S. thought at the time would be a way to kind of force consensus building, project by project, strategy by strategy. Every time there was a change in direction at the board, there had to be a level of agreement between the United States and our allies, as well as the borrowing countries. And that way it would be sort of a bit of an experiment, a little bit different than the World Bank's board structure. The other thing that's evolved into really kind of a different structure and purpose for our institution and some of the other multilaterals is a heavy emphasis on the private sector. So at the time it was created, there was just one balance sheet, and public or small amount of private lending was done out of the same balance sheet. Since then, there's been basically two balance sheets created, and we have a private sector division which provides non-sovereign counter-guaranteed lending and co-finances with investors, originates projects in all sectors of the economies of Latin America and the Caribbean.
That's IDB Invest.
That's IDB Invest, exactly. We also have a fund that takes early equity and provides innovation, but it's obviously much smaller. It's called IDB Lab, and IDB Invest, and this concept of using multilateralism to develop the private sector is something that's kind of evolved, I'd say, over the last 20 years.
Great. And let's talk a little bit about the United States in the mix here. You mentioned that the U.S. has 30% of their share capital, 30% of the voting authority in the bank. There's been a tremendous amount of change going on right now. I think we could all agree, geopolitically. We were just talking about that. Maybe you could share with us a little bit about how that's impacting IDB, multilateral development banks generally, and just a little bit of how this new administration bringing that America First focus and changing geopolitical relationships is impacting this sector.
Okay, that's the coffee question, I
Yeah.
guess. I'd say that there's kind of two ways to answer it. Like one, I don't want to sound glib, but the institution, as you mentioned before, has sort of these institutions, not just the IDB, but most of the regional development banks and certainly the World Bank and the IMF have played a stabilizing force financially and economically, but also in terms of policy formation across a lot of political changes, including we might refer to as Trump 1. There was always and often a request or an expectation that these institutions will, and ours included, will restate its purpose and clarify its purpose and show how, and need to show how its interventions, its financing, its projects are consistent with the objectives of the primary shareholders. In this case, as you're suggesting, the United States. So the United States has asked, the new administration is asking this question broadly: if we're going to be putting resources into these institutions, the IDB included, how does this align with our own priorities? And so a couple of clarifications. One, U.S. hasn't really put any money into the IDB in about 20 years.
It's already invested, yeah.
It's a bank, and the loans that we provide, the salaries, the costs of running the institution are financed out of the returns on the investment. Countries pay back these institutions generally, nearly always, because they have preferred creditor treatment, and if you don't pay back your multilateral, you have trouble going to get finance anywhere else. So we get paid back, and we don't really make bonuses. We return our net income into our own operations, including more lending. And so they're pretty self-financing. And since we are focused on Latin America and the Caribbean, we don't have an IDA equivalent that needs to be replenished every 2 or 3 years. That's a separate challenge for institutions that are focused on low-income countries, a lot of low-income countries. So just financially, we are also kind of self-running for the most part.
So no one's asking for an additional check, which helps.
Yeah, right. And we have been approved to recapitalize our private sector division, which of that division, IDB Invest, U.S. is, I believe, 16% shareholder. Mm-hmm. And so we expect over the course of the next 5 to 7 years that the U.S. will make that contribution one way or the other. But to your kind of the underlying question is, how are we articulating and what do we expect to happen from this administration in terms of support for the institutions broadly? I think we went through an annual meeting 2 weeks ago. So we kind of had the first of all of the multilaterals, the first annual meeting where you have all of your shareholders there, all the governor. We have 48 member countries. So we have ministers of finance from around the world, and nearly all of the ministers of finance of Latin America and the Caribbean present in Santiago, Chile. And we had to ask ourselves, how are we going to have this meeting in a way that demonstrates some degree of consensus, support, momentum, an understanding of the importance of the institution in the region. so that it wouldn't blow up into a political discussion about the more sensitive issues
Right.
that are out there right now, the role of climate change in defining the financing priorities of the institutions, or other areas that are just kind of in the public domain for public debate. And what we did is we looked at our own portfolio, our own demand for our resources, and our strategy, and articulated and focused on what we refer to as a common agenda. So without changing anything, explaining clearly where we are prioritizing and where both the borrowing countries and the wider set of non-borrowing countries, including the United States, agree that these institutions have a fundamental role and that this role is important. So I can give you just quickly, private sector-led development, and all that entails, regional integration, so creating a bigger and stronger market out of the Latin American and Caribbean countries. Security, we have quite a bit of work that we do in citizen security, and a few other, and resilience and disaster risk management. Those are really kind of the themes that we brought forward. And it wasn't hiding, it was explaining. We know that there's a lot of debate about emphasis, about terminology, about what may be perceived as an atomized agenda of the multilaterals.
Yeah.
This is where we're focused, and this is where we have common interests. And we actually had a really constructive annual meeting without any fireworks, which is nothing in this environment.
No, that's not nothing in this environment. And that's great to hear. And also, clearly there was a little bit of a sigh of relief when Treasury Secretary Bessent a few days ago said about the IMF World Bank, there are rumors that the U.S. might pull out. These institutions matter. There needs to be a recalibration of the focus, climate, et cetera. But it was still relatively positive. And I know that you were actually just this morning at a meeting on Capitol Hill with Representative French Hill, who leads the Financial Services Committee, and other multilateral development bank representatives were there as well?
No, actually, Chairman Hill came to the IDB.
Oh, he came to the IDB. Okay, great.
And we had 8 or 9 ministers of finance and other members of the Financial Services Committee with him from both sides of the aisle, just to talk through the role of multilaterals, the function of the IDB in their countries, and then it went more general into common constraints and concerns they have about development, and it was a pretty substantive discussion. So yeah, I missed the photo op to be here, but other than that, it was. I'm glad to.
If you send that photo over, we'll shop you into that one. But thank you for coming and joining us on that, and that's reassuring to hear that continues. Let's just talk for a couple of minutes that we have left. How private partnerships are key to this. You brought this up earlier with IDB Invest as the key focus of yours. How critical is that to developing lasting solutions?
It's critical. It's critical, but it's shouldn't use the word but. It's critical, and it requires a strong public sector as well. This is a point that the Minister of Finance of Dominican Republic was making this morning in our discussions. The rules of engagement, the rules of investment, regulation, pricing, market creation, ability for prices to clear requires a functioning government. Anti-corruption measures and transparency requires all branches of government to be active, and these institutions should be, when we're doing our job well, helping with both things, on the investment side, the project side, how to de-risk or how to manage risk, and how to crowd in private sector finance, and also helping governments to be able to better attract investment and manage that investment in a constructive way when they do have private sector engagement. So yeah, it's a critical theme for us, for our countries. After many, many years in the region, at the annual meetings, after our annual meetings, realizing that there was no kind of open philosophical debate about the importance of the private sector in development across every country. And well, you'll forgive me, Nicaragua, Cuba, and Venezuela were not present, the current governments, but every other country in the region was present, and there was no sort of philosophical debate about the importance of private sector-led growth and jobs, which is really what
jobs is key, and AJ Banga has, of course, focused on jobs as well, which is super key. We have 10 seconds left, but one solution that I was just hoping you could share with us. This is a solution summit. You've been in this development bank sector for a very successful long career, previously at the World Bank. What's one thing you would change today?
One thing I would change of the institution itself?
The institutions, let's say, generally, you don't have to be specific about the World Bank, just generally thematically.
What a good question. We're out of time. So I guess one thing I would change is, or one thing that I think we're working on right now at the IDB is that there's this sort of view of institutions that are outside of national governments as either, it's sort of like a binomial view, like either you are writing checks regardless of what the real impact is, or you are, you're telling countries what to do. And I think these institutions need to do a better job. We need to do a better job. I need to focus on on the dialogue with the most senior levels of government to help them understand that that change, reform, transformation does not have to be done in secret. It does not necessarily have to work against the interests of consumers and taxpayers. If people know what it is that you are going to bring to the table and understand what the impact is going to be of difficult reforms, that you may find that they are more embraced publicly than if you tried to kind of like deal with them in a back room somewhere.
That's a really great point. That sounds like a great foreign policy story, by the way, so we should talk further about that. Jordan Schwartz, Executive Vice President of IDB, please join me in thanking him for his comments.
Thank you so much.
Please.